no book has changed my thought process. My interaction with a lot of very good investors have shaped my thought process. So apart from Rakesh Jhunjhunwala, I have been beneficiary of interacting with the Inam group, with Radhakrishnan Damani, Ramesh Damani. So all of those people have really helped me think to say that I am not averse to reading book. But the problem is that, if you are reading about someone who has been extremely successful in America, what circumstances was he successful? And what are the circumstances in India? That could be different.
So, everybody has heard about you, how the experience that you hold in the market, 30 years, Reliance, then MK Ventures. So it has been an amazing journey, and the kind of knowledge, companies, investing that you have been doing over the years. We would really welcome you to the IMA's 32nd conclave, and would want to ask some questions for the podcast. So here so basically, Warren Buffett or Rakesh Jhunjhunwala, whose investing style would you really like and relate to?
So Rakesh Jhunjhunwala has been my friend's philosopher, guide, and I have learned significantly from him. So obviously, a lot of my investing principle are based on what I've learned and imbibed from him. So I want to acknowledge that I hear everyone and I listen to everyone, but I want to have my own style of investing, which is, which is very original, which is nimble, which is flexible, right? So I don't want to copy anyone for that matter. And my inspiration is to be a better version of my own self every day.
I think Rakesh always used to say the conviction you hold can only help you to make money. So I'm sure everybody has to have their own style to invest. So my second question here is stockbrokers or Bollywood actors, who are better at selling dreams?
I would say stockbrokers that way are better at selling dreams.
I am myself a stockbroker, but still.
Yeah, there's no doubt about that. In my mind, at least. But if you're a good stockbroker, then no Bollywood actor can sell a 20-year dream.
Right.
But in a stock market, you can sell a 20-year dream.
Yes, for sure. So another question that I ask you is, you have always emphasized on long-term investing. So how should investors balance between high growth opportunities and capital preservation? Should I repeat the question?
Yeah, you can. Yeah.
So you've always emphasized on long-term investing. How should investors balance between high growth opportunities and capital preservation?
See, preserving capital is a very big part of making money.
Correct.
Because 100 का 50 होने में 50% घटना पड़ता है और 50 का 100 होने में 100% बढ़ना पड़ता है.
Yes.
Right?
Totally.
So when you are investing, actually you're trying to grow your capital by ensuring that you preserve your capital, right? And that is why that asymmetry of risk reward is what you're always looking for in the markets. That what can I lose and what can I gain? Obviously, you have to put something at stake. But if your horizon is longer, then automatically you are protected. Because if you are investing in a good company, let's say you bought the share at 100 rupees, even if the price goes to 80 rupees, it will not stay there if it is a growth company.
Correct.
So if you have identified a good company and if you have a medium to long-term horizon, then your capital is anyway protected. Unless you bought it at an absolute absurd value or absurd price.
So I would say with capital preservation, if you are investing, you should always look at the cash flow along. Because at the time of investing, it can also fall after.
Yeah.
So you should have some cash flows in place to buy more. Or
that is, yeah, of course, that is something which if you bought something at 100 rupees and if you don't feel like buying more at 75, and there's some disconnect at the time of investing at 100 rupees.
Correct.
You
So-
should feel like buying much, much more. So wherever, whatever money which you have, it is always, you can, if A has become much, much more compelling than B,
Correct.
then obviously you can switch from B to A. And that is the thing which you have. And if people are as lucky as you are, wherein you have cash flow, regular cash flow, which you are getting out of your business, then you can continuously make investment into promising stocks.
Correct. So, another interesting question. If you had a time machine, would you go back to invest in 91 or forward to 2050?
Sorry, forward?
Forward to 2050.
Now I'll go to forward to 2050.
Because
Clearly, the period ahead of us is clearly more exciting than what was behind.
and more opportunistic than
Absolutely.
and
Absolutely.
I think the speed of creation will also be faster than it has been.
Exactly.
Uh, a book that changed the way you think about money. Any? Because you mentioned you usually don't eat, but still any. Like you-
I actually, no book has changed my thought process. My interaction with a lot of very good investors have shaped my thought process. So apart from Rakesh Junjunwala, I have been beneficiary of interacting with the Inam group,
Right.
with Radhakrishnan Damani, Ramesh Damani. So all of those people have really helped me think to say that I am not averse to reading book. That the problem is that, if you are reading about someone who has been extremely successful in America, what circumstances was he successful? And what are the circumstances in India? That could be different.
Correct.
Yeah. The promise in Indian companies could be of a different nature than what it was in America. So you have to just have an open mind. I'm absolutely, I have read a lot of books and I've got a lot of insight, specifically few books written I read one book, the Renaissance of stock market
Okay.
players. So it was a very insightful book. It was all about hedge fund managers.
Okay.
How they live hundreds of kilometers away from the main crowd, and how they are actually able to think independently and still make tons of money.
Correct. No, it's insightful knowledge that we've got. And so here a question for retail investors. So what are the biggest mistakes retail investors make and how can they avoid them?
So
Because
the biggest mistake is you get into this cycle of greed and fear. When you should be really greedy, at that time you become fearful. And when you should be fearful, you become greedy. And second, there is a temptation to make quick money. That doesn't happen. It only happens in theory. And it may happen sometime, but that doesn't make you an investor. See, there is a difference between income and wealth. You can generate income in the short term. But if you don't want to generate wealth, you have to have a long-term perspective.
so like you rightly said that the 15-18% consistency is more important than
Exactly. And if you are an investor, then only you will have that kind of mindset. And there will be 1 year where you make 100% return.
correct.
But, and that if you preserve, 100 will become 80. But if you preserve that 80, then your compounding is of a different order.
Right. No, thank you so much, sir. I would actually want Siddhant, he also wanted to have few questions to ask.
Sure.
So
Basically manage my family office. Our traditional business is steel and real estate, but past few years I've been managing the family office investments and mostly towards equity,
Right.
and getting to learn from you over YouTube, over your various interactions, wherever you have been kind enough to share your knowledge, has been an inspiring journey for us. So I had some questions about investing process. I mean, the years when you started, there was limited information, the technology tools, the apps and stuff, they were not as advanced. And there was quite a lot of opaqueness when you had to make that investing decision. And now, as an investor, I feel there is an overload of information. So how, as an investor, you have to filter the noise from the signal and make that decision and not get overwhelmed with the information?
So clearly, this business has become far more competitive than what it was when I started 25 years back. So that one has to keep in mind. And the other part is why there is overdose of information. But as I was saying, there is a science of investing, there is a math in investing, and there is an art in investing. That art of investing always remains very vital, and that has not changed, and that art has become even more compelling now than what it used to be even 20 years back. But mind you, while there is so much information, but so much volatility also. This kind of volatility was not there when we were starting. Like you've seen in last 1.5 months, the shares have fallen 60-70%. Some of the companies have fallen 60-70%. That did not used to happen maybe 20 years back when I started my career.
Agree.
That no share will fall like in 1 month 60-70%. So every environment brings different kind of challenges, and it also brings different kind of opportunities. If your mindset is that I want to worry about challenges, then you will never be a good person or a successful entrepreneur or a business or an investor. The mindset has also be that in every adversity I'll find opportunity. And if you look at life like that, then you can convert every opportunity adversity in opportunity, like a current market structure. Even my portfolio is down. Clearly, everyone's portfolio will be down. But there are two options I have. I can keep crying and say that I should not have done this, I should not have done that. Yes, there is way to learn. But the other way to look at it is the universe of companies which are available today. They were not available just even 6 months back. So this is also brings, apart from that adversity and fall in portfolio, it also brings this extraordinary opportunity.
Yeah, great. So I think that's why they say investing is more of a game of temperament than intelligence.
Exactly.
And you have to be an eternal optimist to be a long-term investor.
I think eternal rational optimist.
Rational.
I would say.
Yeah. It makes more sense.
That irrationality and optimism should not be clubbed together.
And how do you stay emotionally detached from not tracking the market excessively? Once you have, bet on the entrepreneur that you are with him for the couple of years following through, how do you detach yourself?
So I don't detach myself from tracking the market. I detach myself from excessive actions.
Okay.
Tracking the market is part of my life. That I can't leave. Observing major trends, discussion, even watching prices. This is part of life. But every price or every time you see the price, you don't have to act. You have to have that mental resilience. When do you want to act? That is more important. Watching, there is no problem. Conversing, there is no problem. Talking, there is no problem. But if you start acting too much now, ये सब थ्योरी में होता है दोस्त. ये 100 में लिया, 100 में बेच देता, 80 में वापस ले लेता, फिर 120 में वापस बेच देता. ये मिरर व्यू में बहुत अच्छा लगता है ये बातें करने को. बट इन रियल लाइफ जब आप 100 में बेच देते हो, जब 80 का भाव होता है ना, तो 80 का ऐसा लगता है 60 हो जाएगा, तो कभी लिया नहीं जाता है. A bull market is like a place when once you get out of the bull, it's very difficult to get in again.
Yeah. And there are a lot of books written on how to spot the right opportunity to buy, but there's not enough written about when to sell and lock in your profits. The selling is like the dark continent of investing that people don't know when to sell. And this, most investors who got in 3 years ago would have seen when the PSU rally ended, or the high PE companies crashed down so much. So how do you wrap around okay, I want to stop my greed here and I want to now come back to safe space?
क्या वो experience से आता है दोस्त. When you watch markets ना, when there is real euphoria, like what happened in PSU. बंद कंपनियां भी 25-25, 50-50 हजार करोड़ मार्केट कैप की कंपनियां बन गई. We knew that it is, और एक PSU जो 5-5 पी में नहीं बिकता था, 50-50 पी में हो गया. So I would say the way I have learned market, there are दो तरीके के लोग रोते हैं यहाँ पे. एक आदमी गमा के रोता है और एक आदमी कम कमा के रोता है. तो मैं हमेशा कम कमा के रोने वालों में से अभी 10-20% छोड़ भी दिया तो टूट गया तो कोई प्रॉब्लम नहीं है. You know, we should not be like guessing our investment every day, but once in a while when you see there is real euphoria which is there, वो बोलते पान वाला टैक्सी वाला सब अगर बात करने लग गए मार्केट के, that time you have to be very careful and you have to exit.
And do you done? Okay. Okay. And my last question would be about mentorship. What percentage of your success would you attribute to discussing and gaining mentorship from your mentors?
I think significant success, and I would say ये सब कहानियां है दोस्त. At the end of the day, 90% is all your destiny and luck in life. That if I was born, let's say 60 years back, just as a sheer coincidence, and did not come into the market 30 years back, I would not be who I am today. Because 60 years back, there was no opportunity like this. तो ये लक है ना कि मैं भी राइट टाइम राइट जगह पे बॉर्न हुआ हूँ, राइट इंडस्ट्री में हूँ. So you should not give any disproportionate credit to yourself. Otherwise, you will get into an ego game. You have to take life that it is not destiny. That doesn't mean कि आप हाथ पे हाथ धर के बैठ जाओ कि डेस्टिनी में जो हुआ हो जाएगा. You have to keep your effort, but you have to be humble about your success. But it is not all you're doing.
Yeah.
It's not all you're doing. I think a lot of my success is doing of Narendra Modi. Because he is doing so much good for the country. And we are able to take advantage of it. And mentors से तो बहुत क्या है? Mentors are like जो गूगल का मैप होता है ना, it's like that map. Otherwise, you can go into different directions. फिर मुझे यहाँ से बॉम्बे जाना है, and if I don't have a map, then I'll go random, right? But if I have a map, I will possibly go in the right direction. The right mentor is like that. He's like a guide to you. He's like a map to you. At least he will tell you what not to do.
Lovely interactive. Thank you, Rahul.